Divorce is an emotional aspect. It's a financial reset. For a woman who's actually never handled her finances or is completely dependent on a husband, for her it comes as a complete shock, which is why you should have a financial advisor.
How does one financially prepare for divorce in terms of the costs that are involved?
So cost is just one aspect. It's important to understand that
Nita Shivdasani Bhambhani is the Managing Director, Head, Heritage and Client Origination at Waterfield Advisors with 20 plus years of banking experience. Today she's here to discuss managing finances during a divorce.
We also hear of cases of wild amounts of alimony that are being demanded from men. What do they need to do?
So there's this concept which I think everybody who has a fair bit of assets should work on, is to
What about the tax implications
That's
when
very important.
dividing assets
That's very
during a
important.
divorce?
That's, according to me, the most crucial part, which again a lot of women don't understand. Taxation in a divorce works as follows.
So when we think of divorce, it's of course very emotionally straining. It is a challenging period in anyone's life. And apart from that, there's a lot of talk on it being on financial assets. And the word associated with divorce is always messy. What are some of the key mistakes that people make when it comes to financial asset division in divorce?
So like you said, that divorce is an emotional aspect. I also think it's a financial reset. When I mean a financial reset is that you need to start from scratch. For a woman who's actually never handled her finances or is completely dependent on a husband, for her it comes as a complete shock. So, she then needs to kind of reset her entire life and understand in terms of, how should she start.
Yeah.
So one of the key mistakes that I think a lot of women make is that they don't know how to handle. So they start depending on a lot of people. They'll talk to their friends, they'll talk to people who have gone through this. They'll go and, obviously approach a lawyer. So as and how, they get guided by, friends, family, lawyers, they then take those decisions. I feel, which is why, it's important, is that you should have a financial advisor, and it could be a trusted advisor. It could be, talking in the market in terms of, what is the right way to do it, because a financial advisor will be able to give you that little bit of understanding in terms of, what is it that you need to do, what is the amount that you need to look at, what are your goals, in terms of, how are you going to navigate your life when you're going to do a financial reset? How are you going to navigate your life in terms of starting from scratch, because you've never handled it? The first mistake, like I said, is that they, will only listen to, your friends and family. You should look at, speaking to a financial advisor. You should sit down calmly and understand what are the assets that the family has gathered together over the last few years. And then take a call in terms of, how that division has to happen.
It is a financial reset, and a very daunting one at that. So you're saying a financial advisor, in addition to, of course, getting legal help, is
Correct.
need of the hour.
Correct.
And financial costs as well are very astronomical when it comes to going ahead for a divorce. Can you just give us a sense as to, of course, it's case by case, but what it could range between and what it looks like from initially filing the divorce, going through the years of the legal process?
So that again depends on the entire amount of assets. What are you trying to get from the divorce? So you've seen some of these high-profile divorces where you're talking about hundreds of crores, or in the US you would have heard of half your assets are kind of given to the wife. Those numbers are astronomical. Otherwise, typically a divorce lawyer would charge between a 20 to 30 lakh kind of a number, which would kind of be borne by the husband in terms of because you're filing for divorce. So sometimes it's different. Sometimes you have both of them sharing that cost, or it goes from your total assets that you're dividing, or probably the husband would kind of bear it if the husband has asked for the divorce.
Okay. So how does one typically financially prepare for divorce in terms of the costs that are involved?
Okay, so cost is just one aspect, Avan. It's important to understand that what are you dividing. See, cost is just
Your assets.
Yeah, cost is just going to be a percentage or a few basis points of your total assets. The most important thing is how are you going to determine on dividing those assets. For which, like I said earlier, is that you need to first list down. Now, when you list down, you will have some assets which are immovable assets like property. You would have movable assets, okay? You would have deposits, you would have mutual funds, equity shares. That division itself needs to be thought through. For example, if it's a property, what are you going to do with that property? So is the property going to be given to the lady, or is the property going to be sold and then the assets are going to be divided? If the property is going to be given to the wife, then what is she going to do with that property? The maintenance of that property becomes a challenge, right? She's not going to get any income out of that property. So those are those aspects that need to be looked at, is that what are you going to divide? Charge or the cost is something which is, part of your assets.
Yeah. Since you're talking about division of assets being the most critical, what kind of financial records does one need to have, or what is the most strategic way about going about it to ensure financial stability during and post-divorce?
So typically the way one would look at it is that you look at all the bank accounts, all your last, your income tax records. So typically the lawyer would ask you for these documents. The court would need to see all these documents. What are the properties that you hold? Sometimes we've had cases, or I've seen cases with the wife is not even aware about some of the undisclosed assets, okay? For example, you have some offshore residence or you have some offshore accounts. So that's again where a financial advisor would probably probe the lady or the husband, whoever is approaching us, to ask these questions. For example, she may know that we've been to Dubai and we have a house in Dubai, but whose name it is, how it is, she may not know the structure. So these are some of the nuances which have to get listed down when you're consulting for divorce, which the lawyer needs to be privy to. So the records would be your ITR, which is your income tax returns, your bank statements, your investments. Okay, there are investments which are made. There are investments which are made where the wife would be the joint holder.
Yeah.
Right. So she's obviously party to that investment. If she's a joint holder, she needs to get access to that amount.
Okay. What about the tax implications?
That's
when
very important.
Dividing assets
That's
during
very
a
important.
divorce.
So that's according to me the most crucial part, which again a lot of women don't understand. So taxation in a divorce works as follows: is if you take a one-time settlement, okay. So for example, you say, I'm going to take mutual funds, shares, fixed deposits as a one-time settlement. That gets considered as a capital receipt. And as per the Income Tax Act, capital receipts are not taxed.
Okay.
Okay. However, if you do a structure where you say there's going to be a maintenance that is going to be given, so you say that every month I'm going to pay 5 lakhs or whatever is that amount, that becomes a revenue receipt on which she will need to pay tax. Okay. So it's very important to understand that whatever comes as part of the settlement proceeds is not taxed.
Okay.
Okay. Which again a woman needs to understand that. So when I say a legal advisor, I'm saying a financial advisor and also a tax expert.
So any way to sort of structure settlements in order to minimize or lower the tax burden?
Yeah, so like I said, you have to do a one-time settlement,
Yes.
then you kind of, can, eliminate that capital gains tax. Again, if you sometimes you have, a lot of working couples together.
Yeah.
They are both investors in a company, right? What happens in that? Both of them are shareholders in the company. Again, that needs to be structured in a way where, for example, you say that I'm going to buy you out, right? if I'm going to buy you out, I pay you that amount as a settlement. If I pay you as a settlement, then that does not get taxed.
Okay.
Okay. That's one way that, you know, when you have couples who are together owners or shareholders in a company, is one to buy out the other. The other option would be to probably sell the company,
Okay.
which may not be very tax efficient because you're selling the company, paying tax and then distributing, right? And it could also be doing it at a time where probably you're not ready to sell the company. The third one, which I've seen in couples when they, you know, kind of say that, look, the company is growing, we decide to live apart, doesn't mean that we need to, you know, not be business partners. Okay, we've seen cases on that as well. There, my take is that you need to have very, very stringent legal documents.
Yes.
Because, you know, you can't, you can't be a business partner and, you know, have those differences, which later on then, you know, can have, you know, various issues. So your legal documentation, if you continue to choose to be business partners, even after being separated, has to be very, very strong. I had a case where there were shares which were transferred as part of the settlement. Later on, a lot of physical shares were found, okay, by the husband, in which the wife was also the joint holder. Those physical shares had to be dematted. So when the physical shares had to be dematted, you had to open a demat account, because earlier all those accounts were closed. So you had to open a demat account in the same combination as the husband and the wife. At that point in time, when we did this, the wife said that I need the 50% of these shares. So we then had to transfer those shares as an off-market shares to the wife, because if the husband sold those shares, then he had to pay, if he had to pay her, she would have to land up paying tax. So right now we would have done just an off-market transfer. Whenever she decides to sell, she will have to pay tax.
Okay. What about the cases when you co-own a business, co-own properties, as we said, versus doing something completely different, the husband and the wife? And what about the cases when it's the male or the husband who is working and the wife is a homemaker? How do
Okay,
things
so there are
differ?
three different scenarios. So the first scenario is if you co-own a business, one buys out the other. Either you sell the business, and the third option is that you continue to own that business, but you have very stringent legal documentation. Okay. The second one is where the wife is not
in the same business
or
anything
business,
to do with business.
but she's financially not dependent.
Not dependent on
Not
that.
dependent. There she would then, there you have to then list down all your assets, decide on what can be given to the wife, what is being given to the wife, and then do that entire transfer process. Here it's important, and again I'm rephrasing this point, is that, you know, a lot of times we say, okay, maybe our assets are an X amount. Okay, so 40%, 50% has to be given to the wife. Considering that she is earning, sometimes you say that, okay, maybe she's already earning, she's got assets of her own. So you land up saying that, okay, I don't need to, you know, transfer so much, I need to transfer less. So that is the negotiation which happens with both the spouses and the legal advisor. And I'm saying it's important to have a financial advisor, okay? Because the woman needs to understand is that whatever amount is coming to her has to, you know, sustain her for her entire life. And there a financial advisor plays a very strong role in making her understand what are her balanced life objectives, what are her life goals, and how much amount she's going to need. How is she going to, you know, use that amount which is going to be inflation adjusted?
Now, when children are also in the picture, what is the best way to go about it from a financial standpoint in terms of the assets, investments made? Should it be in joint names? How should it work?
I mean, I've seen a lot of cases where, you know, when children are involved, they have that ability to decide that for my children, I'm going to keep this kind of a corpus. So you see, you know, the male spouse will say that this is the corpus which needs to be, you know, kept for my children's education, my children's marriage. Now marriage is a big budget. So, you know, so those are the allocations which are considered. If it is coming, if the children's responsibility is coming on the woman, then it's a difficult proposition. She needs to, understand how much she would be able to, keep for them. In
But
terms
does
of,
can the male also provide that financial
yes,
support,
yes,
right?
yes, of course,
Yeah, so
of
if
course.
she is unable
Of
to.
course, of course. If she's unable to, then obviously the male has to, the man has to ensure that there is a entire corpus which has been, provided for the children.
Okay. What about if there is some debt or
Yeah,
liabilities by the male,
Yeah.
and now there are divorce proceedings? How do you steer clear from the
so
financial implications?
like I said, it's important that when you're doing the division of assets, which is why it's important to also look at your income tax returns, right? So like you do division of assets, you also have to look at the liabilities. So I had a very strange case a few years back where the divorce happened, the assets got divided. The male had taken a loan in which the female, the wife, was also a co-loaner in that loan agreement. Which later on, as per the court proceeding, because her name was not removed at the time of the divorce settlement, she then had to become a party to, returning that loan amount. So it's very important that even the liabilities are checked. Now, liabilities, we would have read a few cases as well, is that sometimes women sign documents without even knowing that, they've become a party to that loan agreement. So it's very important to check with banks, it's to check with, through the income tax, filings that you do. If there are any liabilities as per your balance sheet, then what are those loans? So it's important that, the advisor would check that are there, is your name there in that loan agreement, so that then you're privy to that, information.
Post a divorce, how does one reassess their financial structure or their financial goals? What should they undergo?
Yeah, so I would say that the first thing that a woman should do is to start creating a budget.
Okay.
Very, very important. She's probably never done this. She would probably be given on a monthly basis that this is the amount to run the house, or she would probably use that amount as per the family pool to do her shopping, to travel, to do whatever. So I had a recent case where a woman was going through this, and when I sat down with her to create a budget, she said, Nita, I don't even know. I mean, I don't even know how my money goes away. I spend tickets. I had to just call a travel agent. My tickets would be done. My daughters are studying in the US. I would go twice a year. I would fly business class because I didn't even blink an eyelid. So, how do I handle this? So I said that it's important that you need to make a budget, okay? I don't want you to, and this is my take on any woman, is that don't try and cringe on your lifestyle, because you're anyway going through an emotional trauma. In that emotional trauma, if you again start cringing on your lifestyle, then that's again going to bother you even more.
What do you mean by cringe?
Because you think that now I do not have access to this kind of corpus, so you will start curtailing your expenses.
But what do you do if you genuinely cannot?
Yes, so I'm saying that, which is why when you're doing your settlement, okay, plan your settlement by looking at what your lifestyle is.
Okay.
Right? So if you know what your lifestyle is, what your expenses are, now some of it is ostentatious, some of it you can easily cut, but do not, deprive yourself that saying that, okay, now I'm going to, use a bus and go, and I'm not going to, hire a, not going to keep a driver, whatever. So don't do those stuff. Because, then you're, you're emotionally drained.
Yeah.
Secondly, then you're monetarily trying to, curtail yourself.
Yeah.
So you need to be slightly, sensitive to yourself. When you're doing your settlement, keep these figures in mind. Is that this is my basic amount that I need, okay? Because that will help you in your negotiation then.
Earlier when we were talking, you said that when one of the partners has somebody else in their lives, things get messier. Is that true from a financial standpoint also? And how do you navigate that?
It is true from a financial standpoint because, obviously they're trying to reset their life and start all over again. So their entire take on, the earlier marriage would be that, how much I cannot, part with in terms of, the amount. So that again becomes very challenging. So it all depends on what the situation is. So for example, you may have enough of assets where you say, okay, I'm going to start my life again. I do not want to be, unfair to my partner. So I am going to, ensure that, she's comfortable, the children are comfortable, and I'm going to provide for them, which is going to sustain their lifestyle. That's one part of it, okay? You will have another part of it where they'll say that, okay, I do not have so much of capital, right? And I am going to start my life again. So then you will start curtailing that amount, so the settlement amount will then be lesser. So you will have, in that case, a very lopsided amount or alimony which will be given to the spouse.
What about those people who are going through divorces that are in business with someone who is related to the other party? For example, the wife's brother or father or things like that. Is it the same that if you're still going to continue the business, make sure it's all down in black and white? Or in your experience, would you advise saying?
I would advise saying to cut ties because, even if you want to do it, it gets very, very difficult. It gets very difficult. So, on a percentage basis, you'll probably have, maybe 4 or 5% who will sustain this. 90% of the, fallout happens, if not immediately, in the next couple of years.
Yeah.
So my take would be is that then, you just cut ties and, move on and start something which is, different.
Fair.
Yeah.
Now, we've spoken a lot from the woman's standpoint, what she needs to do to ensure that she is financially stable. But we also hear of cases of wild amounts of alimony that are being demanded from men. What do they need to do to ensure that they don't get taken for a ride also?
Yes. So there again, I think, it's important to, so sometimes, if somebody has assets worth, say, an X amount, and the woman will say that I need to have 50% of my assets, which I'm, the legal owner. You then need to, bifurcate. So then we've seen cases where you bifurcate that amount because everything would not be under, his particular name. Okay. There would be a lot of, investments which he would have probably, earned after he got married. Investments which were done in his name or, assets which were given to him by, or he inherited it from his parents. She doesn't probably have access to that. Okay. So there's again this concept which I think everybody who has a fair bit of assets should work on is to sign a prenup. I know in our society it is not really accepted, but I think now it's getting there.
So it legally holds in
India? But in India there is no legal, recourse.
So
however, the courts do understand that if a prenup has been signed, then there was an intent on, how it was signed and what was the structure.
So it is taken into consideration?
It is taken partially into consideration. It's not a legally valid contract. However, when you do file for divorce, that document holds some ground when you're doing the negotiations.
Okay. So talk about what someone from a wealthy family typically would advise the person getting married to do, like the equivalent of a prenuptial agreement in India. Anything?
So do a prenup, I'm saying.
Just do the
prenup.
Nothing else?
Nothing else. So do a prenup agreement. In fact, lawyers today advise families to do that. And we as a family office also advise our clients that, if you do want to protect, your wealth, and why do you want to have a situation where you're, going and then fighting in the courts, right?
Yeah.
So get into that agreement right now. And, it is a sensitive topic, but I think it's now gaining a bit of ground in wealthy families. And they are kind of accepting, provided the girl and the boy have kind of agreed to,
Yeah. What about religious grounds coming into place when it comes to the divorce? Does that have any bearing? Under which act you got married under?
No, there's this Tridhan which you're aware of, right? That the woman, whatever she brings, there's this Tridhan concept that is your only law. But otherwise, religion I have not encountered. No.
And what about retirement planning for those? How
Yeah.
does that get affected? How do you make sure that you have your things in place in terms of your retirement savings post-divorce?
Yeah, so when I was earlier talking about the women, that budget, you create a budget, you do life goal planning, okay? So depending on what age you're going through this separation, you do your life goal planning. What is it that you have, what are the goals that you want to achieve, okay? Do you want to go and study abroad? For example, there's some women who say that I want to go and, study.
Yeah.
And start my life again. I haven't done this because I couldn't do it. I want to do that. So you create those goals.
Okay.
In those goals, retirement planning comes. Okay, that at my retirement, when I want to retire at 70 or 75, what is the corpus that I want? That is how we plan our investments. Okay, keeping all these goals in mind, you plan your investments. The settlement amount that you have got should be invested very smartly. A lot of times I've seen women, all that they do is they go and they get that settlement amount and put it in a fixed deposit. Okay. Now when you're putting money in a fixed deposit, you think you're getting your 6-7%. But with inflation at the rate that we are, you're actually getting negative returns. So our advice is that plan your investments smartly. Plan your investments in such a way that when you are retired, your capital is working, money is working for you.
Yeah.
Where you have enough of income that is getting generated, which is then working for you.
Do you have any examples of cases where either party, the male or the female, went about things in an apt manner that should have been done, or probably the other way where things were very messy because there was no financial knowledge or not done the right way, and what they should have done instead that you want to share?
Yeah, so we had a case where she went through a separation, I think in about 2015 or 16, and the settlement amount that she got was invested in pure, because she said I'm very conservative. Okay, so because she was very conservative, investments were done between fixed deposits and some income funds. Okay, when we did an analysis on her portfolio, we realized that she's getting 6.5%. Okay, her living expenses were far more than that. So when we explained to her that, look, this is how your portfolio is actually giving you these kind of returns, that is when she understood, the realization dawned on us that, look, probably have not been doing the right thing. And when markets from 2020 have, kind of seen a decent rally, and you all had to take was that, for taking a bit of growth, you need to take that little risk,
Yes.
right? We showed her that, even a balanced portfolio would probably give you a 12 to 13%, is when, then she took the call. We made some changes. Thankfully, we made some changes at the right time, that today her portfolio is at least giving her about 8-9%.
Yeah.
Okay, so now these are some of the mistakes I feel is that they don't understand, which if you educate them, you show them, make them understand,
Yeah.
do that bit of financial literacy, then they, kind of get it.
So what about when a divorce is absolutely amicable between both the parties? Does the financial strain on either party reduce, or do you think it always ends up becoming a long-drawn legal battle?
So I don't think I've ever seen an amicable situation. I mean, you can be friends. It may just not show up, to us. But emotional and financial need to be
Very
kept separate, right? So emotional part of it, whether you strain, not strained, it's upon the two individuals. But the financial part should be very clear and dry, cut and dry, I'm saying. So you should clearly have, what is, has to be given to the wife, or, what the husband has decided to give should be kind of very, chalked out very clearly.
So finally, what do you think would be, just to recap, the checklist when it comes to succession planning, division of assets for those going through divorce?
Succession planning, once the divorce has happened, the spouse, both the spouses should have their checklist in place. For example, there are trusts which have been formed by families, right? So the beneficiaries need to be changed. So again, we run on a checklist.
Okay.
A new will needs to be drawn up, right? Both of them will have to do a new will. If you are deciding to to dissolve the trust, then the dissolution of the trust should happen. Whether you want to set up a new trust should then be set up with new objectives, with new beneficiaries, whether it's your children or how do you want to work that. But those are some of the succession planning that both of them should do it. Okay. If they don't do it and something has been missed, then at some time later on, then you will have, issues again cropping up.
Like I said, we associate divorce with the word messy, and I'm sure over your years you've experienced many such cases. Are there any clear patterns that you notice?
Yeah, so I remember a case quite clearly a few years back where, a woman was, she was overseas on work, and she was a working woman, and she came back to Bombay and went to her house and realized that the locks were changed. Okay, the locks were changed. Her, so she obviously called her husband to say what happened, and I mean it was a very, very sad one where he just changed the locks of the residence, and in the next couple of days there were bags which were made of her clothes and sent over to her house where she was staying with her mother. What followed after that was, the entire divorce proceeding. It was fairly messy, and she really fought hard to get what was rightfully hers. But that case went on for a few years. She paid a lot of amount on legal fees, but it kind of went on.
What about, in the case of immovable properties in terms of division of assets for such?
Yeah, so, sometimes you have only one house. Now, there it becomes a tricky situation. If, who moves out of the house? Or do you sell the house and then, distribute the amount, which is very difficult. So there what I've seen is that one of the spouse moves out, and the financial assets go to that spouse, and the other spouse then continues holding on to the real estate. There, my advice to somebody is that if you don't have a regular income, then don't fight on the house, because if you stay in that house, I understand housing is important, but if you stay in that house, then you'll probably have a situation where there'll be no income that you'll be generating from that house, because you just have to maintain it. So it depends again on, what the structure is, what is the amount that is coming to you, what is the value of the apartment, and then take a call. Then take a call whether a house is important to be taken or you take financial assets.
What about the case of ancestral property, because that holds a lot of cultural significance in India? I understand that daughters-in-law are not entitled to that.
Yes.
And then in the case of divorce, and what about inheritance?
Yes, so if it's inherited by the son, then technically the daughter-in-law would not have access to it after, in case the divorce or the separation is happening. But again, we've seen cases where if it's an amicable divorce, then you may have the situation where you would want to, give up that house to the wife. But otherwise, as part of your entire corpus that you're looking at towards settlement, that because you've inherited it from your parents does not form part of the pool of the assets.
Nita, you started off by stressing on the importance of a financial advisor while going through divorce proceedings. What are the questions that the person should equip themselves to ask their financial advisor, and why do you think it is so important?
The first question that we ask someone is that, what are your life goals? Okay, it's very important to put down your life goals, and those life goals could be, immediate. The life goals could be something which you need after 5 years or 10 years. So you list down all your life goals. The second most important is that what is the liquidity that you require on a yearly basis. If you understand what your liquidity is in terms of what are your expenses, then you are able to provide a financial plan which will work towards that. The third and most important is that have an emergency fund. Okay, create an emergency fund which will last you for about 3 to 6 months, so that when you have done your investment planning, you have 3 to 6 months of liquidity, so that if something happens to your investments, you're still able to sustain yourself for those 3 to 6 months. Budget is most important. The next important thing that a woman needs to understand is that plan your investments which are tax efficient. A lot of us do not, do our investments in a tax efficient manner. If we understand that investments are for long term, tax efficiency comes in. And the other important factor which plays a very, which is a huge impact, is the power of compounding. If you allow your investments to stay as investments, then the compounding, that happens on that investments, and which you draw down after 5 years or 7 years or 10 years, that power of compounding really helps. So these are some of those nuances which, as a financial advisor, we like to take them through and plan your investments in such a manner that you do not keep, altering your investments.
Thank you so much, Nita, for enlightening us and emphasizing on the importance of a financial advisor during divorce settlements. So many key takeaways from this episode. Firstly, the importance of a financial advisor during divorce proceedings must not be underplayed. It is a complete financial reset in your life, and therefore it is very critical to have a financial advisor. It's also important to understand the assets in place and the division of that, having all documentation in place in terms of bank statements, income tax returns, investments, all of that is very critical. It's also important to have an emergency fund and to set out all your life goals post your divorce. The bifurcation of assets is the most critical, and you should try and make sure that you have tax efficient investments and do not let your emotions guide the way when it comes to financial decisions during a divorce. I hope you enjoyed this episode. Do share in the comment section what your key takeaways were, and do remember to subscribe to Personal Finance TV. I'll catch you in the next episode. Thanks for watching.